Okay, here we are on Friday, October 18th. The markets are still doing what I said in the 5-day forecast on money. They're just holding out as long as they can in this sideways pattern before they make a clear break, strong break, up or down. And of course, I've been favoring the downside, partly because Bitcoin was bubbling up and took a really bad fall and broke some important support. And hey, the political news is not good on top of everything else. Some minor, we didn't raise tariffs further. This phase one is a minor step in China, a good one, but you can see the markets aren't that excited about that because it's not a big deal yet. Now, there is one important thing to look at here. This whole Trump impeachment issue, which has been brewing for many, many months, is running almost exactly parallel on a 45-year cycle. And of course, that's one of our important cycles to the Nixon whole impeachment issue back in late 1973 and 1974. And the same thing, early on, late 73 or so, John Dean started to testify against Nixon, turned against him, just like Michael Cohen, Trump's lawyer. Well, the markets didn't make much of that, but when things kept progressing, markets kept ignoring, but then it came out that the tapes existed and they were going to be subpoenaed by Congress, and then the market really reacted, and it reacted very rapidly in late 1974. Nixon resigned on August 8th, 1974, announced that. And that, again, the markets saw that coming and reacted very sharply. So now note that, I've been saying we've got this megaphone pattern, and we're just kind of putting in this last E-wave top for the S&P and Dow. Now, not the NASDAQ. The NASDAQ does show potential to just be in the middle peak here and could see one more new high, which would be a classic topping process, as I've been saying. But this is what could create this sudden 25 to 30% crash between the S&P and Dow. Dow could go down to 20,000-ish by this megaphone target. S&P down to 2150, 2200, and the NASDAQ down to 57, 5800. I mean, so this is big correction. But this would also be saying it may not be the end. We get that one more rally. But this could be the cause that things just keep snowballing on Trump here. This Ukraine issue, now that, I got the quid pro quo, thing out here as being admitted by one of the White House people, Mulvaney. This is getting serious. And it may not stay serious. But I would not be surprised to see this just get more and more complicated and bad for Trump in the next month or so, and that'd be perfect for this sudden crash. So again, politics repeating itself. Late 1974, and now here we are in late 2019. Perfect 45-year cycle, just a couple months off here between things getting serious, and this could cause the markets to finally react. And the good news out of that for Trump and the economy, temporarily, of course, would be a stock crash right now where the Fed is already starting to get more aggressive in response to Trump's demands, would probably get very aggressive very quickly, and that's what could ignite this final rally. So, the Trump thing could actually help initiate a stronger Fed policy, 50 basis cuts and stronger bond buying, QE again. So again, none of this is going to last long. This is the last stages of desperation, but this is how we could get that final rally that at this point in the patterns of the markets look like the NASDAQ could make a new high in the leading tech stocks, but the Dow and S&P don't. Big divergence, big sign of a top if that happens. And again, on the last top in July, this middle, that's the S&P and Dow made new highs, and the transports and Russell 2000 didn't. So that's already a non-confirmation. And in this megaphone pattern I've been talking about, notice that the highs are only slightly higher and the lows get substantially lower. That is a classic sign of a topping market and the end. And this megaphone pattern tends to only come in the late stages of big bull markets like 1965 to 72. So again, We'll keep you updated, but the markets could get very volatile in the next month or two max, and this could happen very quickly. So put on your seatbelt. It is a good time to be selling stocks here near the top. Yeah, we may make a new top in the NASDAQ, but not in the Dow and S&P. So it still means we don't have a lot of upside, and we do have short-term downside here if we cannot make new highs in the next week or two. So again, put on your seatbelts.